Ladies and gentlemen, good day and welcome to Kansai Nerolac Paints Limited Q2 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anirudh Joshi from ICICI Securities. Thank you and over to you, sir.
Yeah, thanks, Seema. On behalf of ICICI Securities, we welcome you all to Q2 FY23 results conference call of Kansai Nerolac Paints Limited. We have with us senior management represented by Mr. Anuj Jain, Managing Director, Mr. Prashant Pai, Director Finance, and Mr. Jason Gonsalves, Director Corporate Planning, IT and Materials. Now I hand over the call to the management for their initial comments as well as the quarterly performance. Then we will open the floor for question and answer session. Thanks and over to you, sir.
Thank you, Anirudh. Thanks. Good morning, namaskar to everyone, and wish you all a very happy Diwali and prosperous New Year, New Samvat 2079. Thanks for joining this call of Kansai Nerolac for Q2 of 2022-23. During second quarter, we recorded top line growth of 19.3% and EBITDA level the growth was 19.8%. The top line growth is led by passenger vehicle. Decorative growth is double digit in terms of value and volume is flat. Raw material prices are gradually cooling off, but at YTD level still the inflation continues and it is about 7 to 8% inflation is there. So far we have taken approximately 3% price increase. Giving you some highlights of industrial, we continue to increase our market share in automotive. One of the strategy what we have been working upon is how do we increase or better our margins in automotive. So that initiatives to increase the margin continued. One part is the price increase, which we have taken around 3% price increase on weighted basis in industrial. Some of the customers we have been able to conclude, some customers still the discussion continue. Some other initiative in terms of margin, improvement, which could be some are short term, medium term, and also long term, is the introduction of new technology products in the market. So we have been introducing tin-free and low bake. So obviously these are some new technology which the approvals are required from the customers, and in some of the cases the customers have to make certain changes in their lines. But it has a potential to upgrade the business from the existing systems to these new systems. So this is what we are trying to expand. We have also developed one new product and which is successfully introduced also in the market because the government is taking the initiative of blending the petrol with ethanol. So as of now it is the mix of 15%, but the potential is to go to 30% ethanol also. So especially in two-wheelers, that if the percentage of ethanol goes up, then the existing coatings, will not be able to take that. So we have developed the product which can take the blending of this petrol with the ethanol. So that product we are ready with, and whenever the ethanol blending goes up, we are ready to shift to these products. Some of the other initiatives what we have taken in this area, growth initiative, is related to some new markets. So one is this decal market, which is on the two-wheeler. So the decal generally there is a clear which is used. We were not there in that market. So we have developed a good technology product and now we'll be able to service that decal market. The other new area in automotive is PVC sealer and underbody, which basically goes under the car body. So that's also a good size market where we were not there. So we have introduced products in that market also. We are also getting into alloy wheels market and for that also the technology and the products are ready. And we are also made some entry in the high-end anti-corrosive coatings for auto fasteners, zinc-based coatings. So this is also a new market for us. So these are 3-4 new areas which in auto we are expanding. In performance coating, which is a non-auto industrial part, as we discussed last time, that here again the focus is basically to increase the mix, the premium business, and partly we are exiting the business which is very low profitable or the traditional products where we are not able to get the margins. So some percentage of business we have exited, which we spoke last quarter, and obviously the salience we are increasing of the premium. So even at H1 level, the salience of premium is that has increased by more than 1% in performance coating. Performance coating business is also dependent on a lot of approvals, and for this premium coatings, we need approvals from, say, infrastructure, the oil gas sector. So those approvals we have been trying, and we have made a list of that, how many approvals we need, and we are making a progress. So 40% of the approvals we have already got, and therefore to some of these sectors, that will be in a position to pitch for the business. Just to name few, approval, like we got Mumbai Ahmedabad bullet train approval, we got Vande Bharat Express, approval. Some of the orders are also started flowing. So, some of the approvals we have taken in the case of refinery also. So these are some of the examples. In coil coating, which is again a part of non-auto business, where the margins have been very, very low in the last year, and we took the approach of shifting to higher margin technology and the segments. So appliance segment is a better place in terms of margins, while the roof coatings are not. So we have exited a lot of non-profitable business and increased our salience in the premium or appliance segment to around 10%. So also we have got some approval from the leading appliances in the country. In powder coating also, we have been a market leader in powder coating, but our focus is to increase our share in premium. So there also our salience has increased by about 2%, and we have got some new accounts which are going to give us some good advantage. So this is about industrial. Coming to decorative, one of the part of our decorative strategy is related to a paint plus differentiated products with feature-led additional benefits. So we spoke about Beauty Gold Washable was the first product, then Mica Marble Stretch and Sheen, and last quarter in fact we introduced Nerolac Impression Kashmir, and so these are all part of this paint plus super premium category, where we are one a part of our strategy to increase our salience and share in super premium category. So Impression Kashmir we have taken up aggressively, and we got a good response from the market. In fact, we did a fast national rollout and we did a scale up. So across the country, we have been able to launch the product in last quarter. This was accepted well by our network. So this one product which is that where we have increased the visibility also, and we are getting a good response. In fact, to support these Paint Plus products, we also ran a consumer promotion, Har Din Diwali, during the Diwali period, which is still continuing on the premium products, and this was one way to enhance the interest and the preference in the brand category. We were also looking at adding more products in the premium and super premium category, and because as we discussed earlier, that our sale from popular and economy is fine, but if we compare with the market, our salience in premium category, super premium category is low. So what we are looking at is that how do we increase our distribution, the existing distribution, who are buying my other range of product but not buying this super premium. So there we are looking at expansion of distribution. So the salience is increased by 2%. In fact, our growth is definitely better in super premium category. And some of the product which we expanded is in the wood finish, also in the super premium and the polyurethane category. And some other niche products we have introduced in last quarter, which is a Termi Protect epoxy metal primer. Also in Soldier we have introduced True Sheen Emulsion, which is a superior finish at a mass premium price point. So in the Soldier, in fact, we had economy range, but some of these products which we are introducing, which are at different price point and different proposition, and little premiumization in Soldier also. Also, we have started introducing a range of product under Next Gen. So this is a next generation range of product which are basically meant for select distribution. Because the competition in the market is quite high. So obviously some good select dealers, retailers that who want to focus on selling a specific range of product. So for them, we are launching this next generation range of products. In communication, we said that we will be increasing our communication through advertising and digital marketing. Our focus is on Paint Plus, Japanese technology, and jingle. And share of voice, we said that we'll be maintaining around 15%, which we are continuing. Even in the last quarter, all our main markets, that we had a share of voice of around 15%. And one additional point here is that return of Ranveer Singh to our campaign. Ranveer Singh has been our brand ambassador last year. In between, we have taken a break, but Ranveer Singh is back to our campaign, and we launched the Kashmir campaign with him, Impression Kashmir, No Paint Ki Badbu. So no smell, which we felt is one of the insight from the consumer, that there is a segment of customer that who is sensitive to the smell of paint. So this product is highlighting that proposition. We have gone for high visibility for Impression Kashmir. We have participated in Asia Cup Cricket, Indian Idol, and some of the other important programs what we have taken. The other part of our plan is related to influencer program, where we have taken some aggressive approach in terms of digitalization and the app. And obviously, the challenge is that how do we get more and more digital adoption, because the entire incentive, all communication, we are shifting to the digital medium. So it is important to get the higher digital adoption from the painter fraternity. So our app downloads have gone up by 35 to 40%, if we compare with the last year, and therefore we are able to reach out to more number of painters. In terms of our distribution, where we in select markets we also have put some dedicated team to open the direct distribution and some new distribution models which we are working upon. So we have added about 3,000 new retail outlets at the YTD level so far, in this year. The other part is the project business, where in fact we had a presence in the select markets. So there, in fact, we are increasing our presence across key towns, and within the year we'll ensure that all the emerging towns, we are available where the market potential is decent. In new businesses, our salience was around 5%, which I said last time. So it is increased by 1%, or it is around 6%. And we are introducing gradually, not that we are getting into every product, but we are settling with the existing products what we have introduced, and then with the time gradually we are introducing more number of products. For economy products, complete range we have launched. In fact, whether it is emulsions or primers, a lot of products have been introduced. And in the last quarter, at least, we have seen cannibalization and shift towards value of money products, which to some extent is understood, because there have been almost 23-25% increase in last 2 years' time, and therefore the prices of the products have gone up. So there has been some shift towards the economy range of products. The other part was we said we'll be launching. We have launched the services with 5 days painting proposition, 5 days dust-free painting proposition. So in the Q1 we piloted, introduced in 6 cities, and in the Q2 we have expanded the services to almost around 50 towns, and we'll continue to spread that in more towns in the coming quarters. This was also linked to our market development structure, where we said that we are placing the team for the market development who will also be handling the service part. So structure of market development team is put in place. Obviously the hiring is on, but it's put in place, and more than 500 team members is on ground now. This team, related to our services, so far we have serviced more than 15,000 sites in those select towns, and obviously in all these sites we are driving the product upgradation, the Paint Plus, and the new products what we are talking about, and also helping consumer to take the right decision, or giving the right solution to the consumer for the problem what he face when he want to decide about the paint. We are also investing in the digital ecosystem to ensure complete information available and seamless coordination across stakeholders. So the work is in progress. Some work is completed, and we are making a progress, and we have a timelines to see that this ecosystem is ready within a particular timeline. Overall, in decorative, we feel that in the Q2 the market growth is driven, volume growth is driven largely by putty and new businesses. In paint, volume growth is very, very low. So that's our understanding. Few other updates is that we initiated the process of setting near-term science-based target with Science-Based Target Initiative Institute, because that's a process what we need to follow, which we have initiated. As a part of our risk management, risk mitigation, we commenced implementation of RDR. Last time we spoke about our initiative related to the ESG, where we are working on scope 3 inventorization and the TCFD framework. There we have initiated the process for setting near-term science-based target, as I said earlier. One qualitative point which we mentioned, that what we are working to improve in the organization is basically to scale up and sustaining momentum, the speed to scale up and sustaining momentum, and under that we are focusing on some long-term value creation through internal initiatives. So some of the initiatives are that we have taken the approvals, in the process of taking approvals for ESOPs. for performance and retention for key employees. And the final scheme is still not announced. Shortly we'll be making the announcement of the scheme, but we are definitely taking care that it is majority towards performance, and it is linked to the performance. But for the key employees, it is also some retention base. We are working on the capability building in the current situation and the way the platforms are changing. So we have introduced one Percipio digital platform for skill enhancement of our employees, and we are running a structured program to see that how do we make the continuous improvement in the capability building. The other area is brand building. In fact, we are the initiatives, some of the initiatives are spelled out, we have taken, and we'll continue on that. And the services and building influencer connect. Also, that we have added as a part of this is a last mile service improvement. So with the introduction or increase in the number of products, the number of categories are going up, and the real estate, the prices. So sometimes the dealer is not able to increase his warehouse's space, and per SKU inventory actually is going down. So we are mindful of the fact that service needs improvement. So we are working on that. And overall, our direction remains that we have to increase our profitability in industrial and increase investment in decorative. So these are some of the highlights related to the quarter and from my side. And now we invite the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Mr. Abneesh Roy from Nuvama Institutional Equities. Please go ahead, sir.
Yeah, thanks. I have 3 questions. My first question is on the deco business. You mentioned share of voice is around 15% is what you are targeting. What was it, say, 3 years back? And how does this help? Because your deco market share is also not very different. It might be a bit lower. Your share of voice is a bit higher. It's not a very marked difference. So how does it help in the overall scheme of things in terms of gaining market share, given you're introducing so many new premium products also?
Yes, Abneesh. So we said target of 15% share of voice. So it used to be 3-4 years back when we were spending good amount in marketing. It used to be in the range of 15 to 20%, and then it came down to say 6-7% level, and now we are seeing around 15%. How it helps is that it helps in terms of maintaining the visibility, and when we are introducing the products, so that how do we communicate the introduction of that product. Now the efficiency that how we are building is that if you see our campaign, there are some common elements like Paint Plus, Japanese technology, and jingle. So that last 2 or 3 campaigns what we have introduced, the product changes, but the format of the campaign remains same. So ultimately there is a continuity, and we keep introducing, and therefore that when we come out with a new product, at least some of the products we are able to communicate with the right proposition.
One follow-up on this, the drop from 15, 20 to 20% to 6 to 7% is very stark. Normally we don't see consumer companies do that, and now you're coming back to 15%. So my question is, why did you drop to 6 to 7%? Is it linked to your overall health of business in the industrial part of business? And can that again recur? For example, would that problem, if it comes back, so this 15%, can it again come at risk?
So Abneesh, is in fact, one that, okay, we were spending that amount for a few years, and partly I would say during the COVID time, because generally during the COVID period, initially we lost the season time and other time. So obviously this percentage has come down there, and then obviously we wanted to see. And I think in the last meeting also we said that maybe we have taken some decision which we felt later on that hindsight it may not be right. So there is some minimum kind of thing which you need to support in terms of advertising. And in our businesses now we obviously look at these businesses separately, and therefore the decorative requirement is around this percentage which will maintain irrespective of that what business pressure comes for other categories.
That's helpful. My second question is on your Nerofix adhesives. I understand the growth is 40%. Of course, that will be on a small base. Here my question is now when such a large player is going to come in paints in the next 4 quarters, does it make sense for you to do a non-core business, especially given market leader in paint has also tried adhesives. They are still there in adhesives, but I don't think it has met the initial expectation, which I think market would have or the player itself would have. So could you address this bit from a 1 year, 2 year perspective? Does it make sense to focus on adhesives also, or it will be more of just riding on your existing distribution, not too much of advertising and sales support?
Yeah, so you're right. So not too much on focus on this particular thing. We are riding on our existing distribution, and this is like a joint venture, which we have a Nerofix, and one part is industrial adhesives, which that there is a synergy with our industrial business, and in the consumer business, just riding on our existing distribution, there's not going to be any specific focus.
Right. And last quick question on the paint distribution side, you mentioned you're trying to target new distribution models. You also mentioned YTD. I think you added around 3,000 retail touch points. So could you elaborate on this? How much of this is able to cater to the core deco?
All are deco only, but 3,000 overall outlets. And the one point I want to add is that last time also we said one of the business model is now we have given a name to it. It's a next generation premium Shopee. So last quarter we finalized almost around 50, and all 50 we have executed. These stores are up in the market, and in fact we have finalized another 25. So this is one of the model, and there are few other which we are working upon.
Could you elaborate on this? Is this more of a perfect store which say HUL has? So will be more of branding, point of sale within that dealer?
It is, yeah, it's like a experience store, you can say, where there is a branding, and also like our proposition in terms of demonstrating the product, that how products are better than the other products. So that's the attempt we are doing. So wherever the customer footfalls are higher, and there we are creating this kind of experience. And from these stores, our focus is to increase our premium, sale.
Sure. Okay. That's all from my side. Thank you.
Thank you, Abneesh.
Thank you very much, sir. We take the next question from the line of Mr. Aditya Bhartiya from Investec. Please go ahead, sir.
Hi, good morning, sir. So you mentioned that in Q2 for the industry growth was driven by putty and some other low-value products. I just want to understand how has Kansai fared on that front, and has there been any divergence for Kansai vis-a-vis the market leader?
No, so in fact, in our case, as I said, in decorative, our volume is flattish, and in fact, the putty is slightly negative. So to that an extent, excluding putty, there could be small growth. And putty, our approach still remains selective because there is a pricing pressure in the market, and the margins are not there. So, but obviously to satisfy our distribution network, we have to keep in certain market and for certain time frame. So we are not looking at a high growth in putty segment. So as of now, we are just trying to hold to some extent and selectively basis that we are participating. So that is related to a putty. And for the new products or the new businesses, obviously it is not comparable with the industry because we have our own approach in terms of what products we are choosing or what range we are choosing. We are not trying to get into everything. And our salience on the new business, as I said, is about 5%, while for industry it may be more than 10%, it could be 12% also. So even if we have a similar growth, the difference will come because of the salience. So as of now, we'll say that in the paint, we are narrowing the gap, and putty as of now will continue to be selective till the time we get the right situation, and new business gradually will improve.
Understood, sir. And secondly, sir, on waterproofing side, how are we faring on the waterproofing and construction chemical businesses? How large these businesses could be for us, and at what pace are they growing?
When I talk about this 5%, 6% salience, it is from new business. One of the business is construction chemical, and that would be a large part of it. So we have chosen the product which we felt that goes with our strength or our understanding, and at least on those products now we have caught up with the market growth, but we are not getting into full range which market has introduced. So market is good. I think this has definitely has a potential because after the paint companies have started construction chemical and waterproofing, I think the market also is expanding, because earlier this was basically if there is a problem, then as a solution it is given. Now it is given as a preventive solution also, that when you are doing a paint, you can apply the waterproofing under it. So to that extent, the market is expanding, and this has definitely become an integral part of paint. And I think the prospect going forward in the future is good.
A couple of quarters back, sir, you had indicated that we now have pretty much a full range of waterproofing solutions. So does it mean that we want to restrict ourselves to certain solutions, and we are happy with the kind of range that we are having today? Or does it mean that over a period of time we may still see ourselves getting into areas wherein other competitors are there?
So we started with, that time also I said that, the first is that we have a distribution, and whatever is, product that distribution is keeping, so we have come out with those products. So that range we have completed. And, because since we were late entrant, so obviously our distribution was also buying from others. So last time I said that 30% of our distribution has started buying from us. Now the figure is around 35%. So we are just trying to expand within our distribution those range of products which retailers are selling. And as we become little mature on that, our understanding is completed. We do have a pipeline of the products which are like specialty products.
Understood. That's very helpful, sir. Thank you so much.
Thank you. Thank you.
Thank you very much. We take the next question from the line of Mr. Avi Mehta from Macquarie. Please go ahead, sir.
Yeah, hi, sir. Hi, Anuj. Just three questions. First, the leader has announced a very aggressive capex plan, not only to kind of expand capacity, but, also backward integration. Do you see a need to kind of have a similar focus on capacity expansion, or do you see this impacting us in decorative or even in the other industrial segment as well? Would you love to hear your thoughts?
So it's like depends company to company. Little difficult to give answer to that. But I can only tell you, if you look at say industrial, which is our one important area, there the backbone of the paint is resin, and almost more than 90% resins that we make it in house. So, and in fact in the recent past also we expanded the capacity of resins. So whatever this automotive market is cyclical, assuming that the market will have a good run for next few quarters, few years, I think we are prepared for that. So that's first part. There are certain other areas where there may be a potential, but as the time goes we'll evaluate. In the decorative, again, the largest part is the emulsions, which most of the emulsions we are making in-house. They're also in the recent past in our Amritsar factory, we have expanded our capacities. Now this area is a new area, which is, I don't think it's our expert area, because there are a lot of experts in the market, and sometimes it depends on the scale also. So this is a completely a different game. So there was a time when some of the companies were there into chemical businesses, and so we feel that we may not be right people to get into these kind of things, but otherwise the emulsions and the resins, there we already have the backward integration.
Got it, sir. Got it. So no impact on industrial and deco. We'll wait and watch and see how best way to respond. Okay. So the second bit is, just kind of picking up where you indicated last quarter that since in the deco market growth was also led by Tier 1 and metros last quarter, which is first quarter, the growth was impacted by us. Now with upcountry growth picking up, should we expect the growth rates in the decor market to be broadly similar, or do you think it's too early to call out a upmarket recovery?
Only change from that time to this time is that in the quarter 2 we have seen that Tier 2, Tier 3 growth is coming closer to the Tier 1. But if we talk about Tier 4 or the rural, as per the census, if we say population less than 20,000, there the growth is still very low. So our data says that that small market or rural market is still under stress.
Okay, so that pressure for us may continue for some time. Maybe we need to kind of.
We're a little hopeful that maybe because with the monsoon was good, so maybe post Diwali or fourth quarter it may pick up. Because at least we have seen some positive change in Tier 2, Tier 3, Tier 4. So it may cascade down to these smaller markets also, but we have to wait and watch.
Okay, and lastly, sir, on the decorative market itself, are you concerned about the growth? Because your comment on the third quarter was of growth rates likely to remain under pressure. So is it that now we are, the inflation is starting to bite and hence growth rates per se in the deco market are likely to moderate on a run rate basis. Do you see that as a concern, sir?
Short term, yes, because if you see last year Diwali was in the month of November, and this time Diwali was early, and the rains were continuing till almost 15th of October. So generally what happens is that people paint after rains before Diwali. So that period after rain before Diwali was hardly a 1 week. So actually you need a window of at least 20 to 30 days, and that window was not available. To that an extent business is down. And in the month of November, if you recall that last year there was the price increase, the highest of the price increase has happened in the month of November, and therefore a lot of stocking has happened in the market. So subsequent month the growth was not very high. So therefore, that the only optimism could be that post Diwali, if people have not painted before Diwali, whether they'll resume the painting post Diwali, we'll have to wait and watch. But I think because of these reasons, the basis, for last year, the third quarter demand could be muted. So we believe that like first quarter was good, fourth quarter also could be fine, because of the reasons I said. The subsequent months the base was not so very high, but this quarter the base is high.
Got it, sir. So just a near something. Thank you, sir. That's all from my side, and wish you luck.
Thank you.
Thank you very much. We take the next question from the line of Mr. Shirish Pardesi from Centrum Broking. Please go ahead, sir.
Yeah, hi, good afternoon, Anuj, Prashant. Thanks for the opportunity and happy Diwali. So
thank you.
To start with, you gave interesting remark that the volume growth was driven by putty. Now, is the similar trend you are seeing in the month of October?
Similar trend you are saying?
Yeah, I'm saying Anuj made a comment saying that the larger growth was driven by putty, and ex of putty, the decorative volume growth was flat to marginally positive. So is the similar trend, I mean, where I'm coming from, because you did mention that there's a down trading which is happening for low-end emulsion. So is the volume growth in the quarter 4 or quarter 3 when we look at, of course, quarter 3, understandably you have a high base, but is that the trend which is structurally seen in the market?
Specifically for October, if you are asking, maybe by and large a similar kind of trend, but for the quarter difficult to comment. But yes, that because the trend is ultimately Diwali period is like this July to October. Only thing what happens in July, typically people stock say items like enamel, distempers, then August the economy and kind of things. By the time September come, the premium range gets some kind of traction, but by and large similar trend.
I just want to little more clear in my mind. You did mention that Diwali has happened in the month of November, but is that the impact we have taken a sharp price increase and that's why people are moving to the lower price points?
Yes. So as I said that there is a price increase. If you look at 2 years basis, the price increase is almost 23-24%. So that is visible in the market that people are shifting to the popular or economy range of products. So there is a shift happening. So to that an extent, as I said, cannibalization that some of our popular product, the growth is not so good. But in the economy range or like the products what we have introduced, for example, the primer at a lower price, some of the product like we introduced like Little Master in beauty. So there is a shift in sale from the popular to the economy side.
Okay. Just to re-clarify, you said that we have taken 3% price increase weighted. So what is the price increase for first half total?
So that is for first half.
So total is what, 3%?
Yes, 3%. For decorative also 3%, for industrial also 3%.
Okay. My last question, if you can split the growth, your stronger markets versus non-stronger markets, or maybe to my understanding, South has done better in quarter 2, while the North and Central had a lot of challenges. Maybe extended monsoon is one of the reasons, and also liquidity is also one of the things which consumer companies are at least highlighting. So maybe in your thought, in your lens, how do you think, and if you can help me, how your stronger markets, non-strong markets, the growth?
So our strong markets are North and East, and weak markets are the South and West. But in terms of growth, what we have seen, higher growth from South, followed by North, followed by West, followed by East.
East was lowest.
Yes.
Okay. That's really helpful. Thank you, sir, and all the best to you.
Thank you.
Thank you. We take the next question from the line of Mr. Mihir Shah from Nomura. Please go ahead, sir.
Hi, sir. Thank you for taking my question. I have a few questions. So firstly, it seems like your mix did not deteriorate as much as the market leader, but given the seasonality and also your rural grid growth did well, can we say it had some impact on margins? So margins were impacted due to, inferior mix. So that is one. And can margins get better sequentially with a better mix going forward?
So generally, in decorative, what happens is that if you compare the second quarter, which is a Diwali period, with the, say, quarter one, there is always a deterioration of the mix. And it happens mainly because the contribution or salience of the item like enamel, distemper, low-end primer goes up. So approximately 2% deterioration we always find, so that change is there. So that is one reason. Otherwise, within the decorative, as we said, that our super emulsion salience has gone up, even emulsion salience has gone up. And the other part is the change in the business mix, because the growth is higher from the industrial. So our salience of industrial has gone up, and where the profitability in comparison to the decorative is, lower, and therefore that also has affected the margins.
Got it. Very clear. Secondly, on the difference between the deco margins and industrial margin, you had highlighted it was, there was a 7-8% gap. That gap would have seen some improvement, of course, but can you share any indication of how much it has contracted and the trajectory going forward as well?
So industry margins definitely have improved, based on, as I said, the inflation still continues, but the price increase what we have taken, that has helped in terms of improving the margins. But in decorative, one, as I said, the mix change. The other is also we have increased our investment as we spelled out earlier in decorative. So that is how it is, the mix back.
Okay. Would the difference be about like 5% or still like 6-7%, or any target that we have, to reduce this gap?
It is bridged. It is definitely bridged. So 1 or 2% now it is bridged. And as we have been saying that, because the decorative, the investment also is going up. So somewhere, that it is balancing out. But industrial margin definitely have improved.
Got it. So lastly, if you can talk a bit more on your non-auto industrial performance. Past few quarters, we had seen a strong pickup in non-auto industrials. Is that sales momentum continuing? And if you can share, what is the mix of volume and pricing in that segment? Would it be like 2/3, 1/3 volume pricing, or like 50-50?
So non-auto industrial, there are like general industrial, high performance coating, powder coating, coil coating. So there, in fact, our approach is basically to increase the business in the premium, and the momentum is definitely continuing. The only thing is that sale get compensated to some extent, as we said, that some of the non-profitable business, that exiting in the sense that we are increasing the price, and sometime we are not able to hold up that business. So we are increasing the business of the premium, but the lower side business is becoming lower, but the growth momentum continues.
Got it. And lastly, one bookkeeping, any one-off on staff cost? It has shot up, quite dramatically by 17% this quarter on a YY basis.
Because we have our increments in the month of July, so that is the reason that has gone up.
So pretty much standard. So no one-off basically.
Nothing one-off.
Okay. Thank you very much. All the way best, sir. And that's all from my side.
Thank you.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Mr. Jaykumar Doshi from Kotak. Please go ahead, sir.
Yeah. Hi. Thanks for the opportunity. So 3 questions. The first one is, sorry, I may have missed, what is the YOY growth in value terms for decorative business?
What is the?
YOY growth in value terms for the decorative business, decorative paint?
It's a double-digit growth. Value.
Understood. So one thing which I'm unable to understand is when we think about pricing on a YOY basis, pricing is up about 20%, or maybe more than 20%, and you called out flat volumes or maybe marginal volume growth excluding putty. In your case, you've not, your volume growth is not driven by putty. Then why is it that, on a YOY basis, the gap between value and volume is just 10% point, while pricing is up 20%? And we understand that some of your peers, there is a significant deterioration in mix on a YOY basis. So we can understand the narrowing of gap, but in your case, we would have expected volume value gap to be somewhat similar to pricing.
Yeah, so one of the reason is that there are some economic products what we have introduced, like in beauty emulsions, Suraksha, the primers, and there is a shift from the popular range of product to the economy range of product, and therefore the average selling prices of that range has come down significantly.
Understand. So essentially it's down trading.
Yes, down trading.
Have you also seen increase in rebates and discounts versus last year? So one is,
yes.
Is that also another reason for that, or that has been stable?
Yes. During the second quarter, this July to September, there have been definitely the increase in the rebates.
Understood. Now, at current spot prices, based on your inventory with RM pricing easing a little bit, how should we think about gross margin trends over the next 2 quarters, that is third quarter and fourth quarter versus the current 2Q gross margin?
So I think obviously this trend of cooling off raw material prices is there, but some volatility now because the rupee is depreciating. So what impact of that will come on the inflation? So situation is not 100% clear, but I think if the same trend continues, we may see some reflection in the quarter 4. Quarter 3, I may not be very hopeful, but quarter 4 we may see some reflection of that.
And when you say some, is it like 100, 200 basis point, or can it be better? Is there any chance it can get better?
The margins will definitely improve, but again it depends on, as we said, that our strategy is basically to improve the margins in industrial and invest in decorative. So as we improve the margins, we'll be increasing some of our investments in decorative.
Sure. And final question, good to see marketing spends in decorative business increase in marketing spend. What is the benchmark or what's the ballpark A&P spend as percentage of sales that we should model going forward?
Actually difficult to comment upon that, because to tell you very frankly, as of now that we make some assessment of the figures and we start doing that, but what we do that, what activities we are doing, what is the response, and whether we are able to get the desired response, and therefore some moderations, required to be done. So as of now, as I said earlier also, I think we are not going to look at what we have been doing 4 or 5 years back, but obviously we are increasing, and also as that we increase our profitability in industrial or increase our mix, because our focus is super premium, so that gives us some better mileage. So accordingly, then we'll see that some of the areas whether we can invest more.
Understood. So reasonable to assume that it won't be as high as FY17, 18, 19, but again higher than FY2021 as a percentage of sales, or even FY22.
Yes, you're right.
Somewhere in between, right? All right. Thank you so much. That's it from my side. Good luck.
Thank you.
Thank you very much, sir. We take the next question from the line of Mr. Abhijit Kundu from Antique Stock Broking. Please go ahead, sir.
Yeah, hi, thanks.
Hi.
So, sorry if I've missed on this, but wanted to get your understanding on auto volumes have seen a significant recovery. One of your key clients has posted very strong volume growth. How much of that has benefited you in this quarter, or should benefit you in the coming quarters? And also, what happens is that when auto recovery happens, then the OEMs also give you a better pricing. I mean, the price hikes also happen. So you have alluded to that 3% has been the price hike on overall in industrial paints. So just wanted to get an understanding on the on the sales part coming from the recovery in auto OEMs, and also on the profitability part. So could we see better profitability because of better passage of price hike, and also better volume growth going ahead, or the better volume growth is already factored in the current quarter? Just wanted an idea on that.
Yes. So in automotive, it is basically passenger vehicles, then your 2-wheelers, 3-wheelers, and this CV and tractors. So this growth is led by passenger vehicles. Two-wheeler growth is still muted, though it is better than last year, but it is still, so one has to say that passenger vehicles in this year may touch the pre-COVID level, but two-wheeler still would be down if you compare with the pre-COVID level. Tractor demand is also subdued. So primarily it is led by the passenger vehicles. And I think that run, as of now, we feel whatever information is published in the market, we feel it will continue. On the price increase, from some of the customers, we have already taken the price increase, and for other customers, we are continuing. And you are right that, when the performance improve, then, because when last year the inflation was very high and we have not been able to take full price increase, but situation is better with the customers now, and I feel that, that we'll be able to get more price increase.
Okay. And so the significant recovery that we have seen in passenger vehicles, that is already factored to an extent in during the quarter.
Yes.
Just confirming that.
Yes.
Okay, sir. Thanks.
Thank you.
Thank you very much, sir. We take the next question from the line of Mr. Sanjay Satpathy from Ampersand Capital. Please go ahead, sir.
Yes, sir, thanks a lot for the opportunity. I just wanted to understand from you that this industrial segment, how much did it grow on a year-on-year and sequential basis? Is that something which you can share?
Generally, we segment-wise, growth we don't share, but, obviously you can say that the production growth of passenger vehicle is higher than, say, 20%. And I am talking about the H1. Quarter 2, it was, further higher. So the growth of passenger vehicle specifically is higher.
Understood. The reason why I was asking is that your overall revenue performance in Q2 compared to Q1 is lesser than the market leader, that is Asian Paints, and this is despite the fact that you have a bigger contribution of automotive, which has done so well. So where exactly was the drag for you in terms of market share loss?
So as you said that we track it on 3 parts: paint, putty, and new business. So this putty, I think earlier also I said that we are keeping it restricted. The market growth is driven by putty and the new businesses. In paint category, our understanding is that the growth is very, very low. So to that extent, we have narrowed the gap and closer to it. But putty gap continues, and new business is not comparable, because we are making our own choices that which business, how many products to be into. So that is not comparable. So comparable is basically paint.
Understood. And you are a market leader in industrial and automotive, and whereas you are not in decorative, and at this point of time, there is a new entrant which is coming into the decorative side. Of course, you are trying to defend your position by increasing branding spend there. But in the process, are you going to be again kind of neglecting the industrial side of it?
No way. In fact, industrial, because every business is a separate business unit, thing. And in this kind of situation, I think that we'll be increasing our focus on industrial also, because these are separate business units. So one focus does not affect the other focus. And fortunately, like passenger vehicle run is good as of now. The non-auto industrial paint, where market share is not that high, there in fact some of the initiatives in terms of product, technology, premium, the putting up an approval team. So some of these initiatives we are taking so that we can look at more business in that area.
The last thing I just wanted to check with you that on your basis, while you are guiding towards relatively subdued performance in December quarter, so will there be? Will you continue to kind of see some kind of a margin decline on a year-on-year basis as well, or the margin has kind of reached the floor and it will keep on improving from here on?
Margins, I think, are on the lower side now. So if I just purely say about margins will improve. But as I said that we are also in the process of increasing our marketing investments in decorative. So right. I think you have to keep that in mind.
And so my question is that despite all that, has the margin reached a level from where it can only go up, even though it may not really reach the kind of level which we in the past?
I think the margins are closer to the lower level only, and from here the margins will improve. But again, I am repeating the point that margins may improve, but we may increase our investment in decorative, so therefore you may not find any effect.
Understood. Thanks a lot, sir.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Ajay Thakur from Anand Rathi Securities. Please go ahead.
Hi, sir. Thanks for taking my question. So I have two questions. First one was obviously on the margin front, which other participants also have been trying to kind of get a sense on. So if I were to look at, the current prices of, say, crude oil and the current rupee, so what kind of a gross margin, excluding of the marketing spend, what kind of a gross margin we look at, say, in Q4 or maybe over the next 1 year? What kind of improvement can we see on a ceteris paribus basis?
Prashant, do you want to answer this question?
So at gross level, overall, as Anuj mentioned, that we are focusing on improving the industrial profitability. We can see at least 2 to 3% improvement in gross level, right? So that's possible.
Okay. That's quite helpful. Thank you, sir. And second question was more on the Painter app. So we are talking about, innovative channels to reach out to the painters and also to, increase our distribution or, the kind of offtake from them. So, sir, what kind of, similar kind of innovative channel can we reach out to drive growth, which can actually, help us not being affected by the distribution muscle of the Asian Paints and the leader of the segment. So what kind of other innovative channels can we also look at, such as e-com channels, which can obviously try diversify our growth basket and kind of help us in terms of faster growth. Any kind of a broad outlook or a sense would help.
So there are some thoughts about it, but as of now we'll not be able to spell out completely. But I can only say that one area is the service area, which is like emerging area now. At least there is some traction that some decent part of the business started coming from the services, which is dependent on the lead management system, that how do you generate the lead and how do you conclude that lead. In the area of e-commerce also there are certain opportunities, but maybe at the right time we'll discuss about it.
Okay. Quite helpful, sir. Thanks for taking my question.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Rishi Modi from Marcellus Investment Manager. Please go ahead, sir.
Yeah, hi, sir. So just to get some context on the numbers, so Asian Paints has announced that they're backward integrated into VAM and VAE. So how much of your decor paint cost is a VAM component, the enamel cost, or the total cost? How much is VAM as a component? Or so just trying to assess if that backward integration makes any sense for them.
Almost zero, I think.
All right. So is it like a new technology that or new type of paint that they're going to use this VAM or VAE for, or like what is your view on this backward integration?
So what happens is, like, there are some standards of VOC, which are like European standard and American standard, and we are in compliance of those standards. Like for this low VOC, less than 50 gram per liter is the standard. So this VAE technology helps in terms of bringing down the VOCs. But then there are some other technologies also which can help in terms of bringing down the VOC. So these are some in the areas of sustainability. As I said that, but whatever compliances are there, we are compliant to that. And there are means and ways to achieve further lowering the this VOC level.
Okay, all right. And so on the putty business, right?
What I said we are following is a European standard. I missed saying that American, but it's a European standard.
Yeah. Okay, all right. And so on the putty business, right? So just trying to understand this industry a bit better. Like, how big is this industry size, and do you think like the strategy that's being employed by Asian Paints of lower pricing, is it the way to go, or do you think this is not really a commoditized market?
So this is like, I don't know how to say the size, because there are a lot of non-paint players into this, but you can say that every 1 liter of emulsion, 5 kg of putty. So if we say market size is 40,000 crore and emulsion would be 50%, so 20,000 crore. And so if you divide it by so maybe 4,000, 5,000 approximately, just a rough idea I'm just trying to give you. There are a lot of non-putty players, non-paint players. And this is a commodity product. The average selling price is just about 18 rupees a kg, 18, 19 rupees a kg, and it is sold on discount. So obviously the discounts have gone up in the market, and therefore, it's a commodity product which basically led by discounts.
Right. And do you think the backward integration of putting up plants in Saudi Arabia helps, or to get any margin extraction, or it's just to get lower pricing and pass it on? What do you think is the rationale behind such backward integration in such a commoditized business?
There may be some advantage, because ultimately the main raw materials in the putty is white cement and RD powder, and the RD powder also consume this VAE and AM and the white cement. So these are two key raw materials, two out of three key raw materials, and there could be some advantage in terms of pricing.
Okay, got it. All right, thank you. That's all from my end.
Thank you.
Thank you, sir. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thanks everyone for posing questions. Or your questions always highlight and trigger some of the thought process also. Thanks for making contribution to us. And as we spelled out that it's a long-term value creation, the building of the initiative, the business building, what we are embarking upon, not getting averted with the short-term things. I think that we have made our way and we are working on it, and let's see that how it goes, in the long-term basis. And thanks for attending this call. Wish you the season's greeting for the coming December and Christmas and New Year, and have a good time and have a healthy and wealthy time. Thank you so much.
Thank you. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect.